absolutely critical for every business owner, professional, and decision maker in Nigeria today. My name is Taiwo Dewenwa, and I'll welcome the opening session of today's program. Whether you're here as a business owner, finance professional, entrepreneur, or simply someone trying to make sense of Nigeria's evolving tax landscape, you are in the right place, and I welcome you. Today, we'll be going through exciting topics. And before we go any further, let's get the room talking. So please head straight to the chat box and introduce yourself by sharing 4 quick things: your name, your business or profession, your location, where you're joining us from, and 1 key expectation you have from today's session. Please go to the chat box. I want to see where you're coming from, where you're joining us from. Okay. Okay, from Lagos. Mike, Lekki, Lagos. Kolawole, Ogun State. Tolulope. Okay. Delta, wow. Lagos, Lagos. Ayonpeolua. Or you want to deepen your tax understanding of the tax reforms. Yes, you get a different knowledge today. Okay. Obey, Delta State, founder of Old Tax. Interesting. We're glad to have you here. Omolara from UK. Please, let this keep coming. We want to know where you're from. Just give us your name, what you do, whether you're a business owner or the name of your company, where you're joining us from. Hillpart, wow, Lagos, Lagos. Okay. We have quite a large number of Lagos and Ogun states. Okay, Tunji from UK. Goiga, Port Harcourt. Interesting. Interesting. Okay, Sunday, you say you are eager to know how the new tax law affects self-employed professionals. Okay. Okay, Olariwaju, health professional from Ibadan. You want to understand the current tax landscape of Nigeria and how it affects the health sector. Okay, please just keep this rolling in. We want to have an idea of where you're joining us from. And we want to know what your expectation for today's event is. If you're just joining us, please go to the chat room, give us your name, your business or profession, your location, where you're joining us from, and 1 key expectation you have from today's session. This is fantastic. I can already see participants joining from different industries and locations. This is interesting. Thank you all for showing up. This level of engagement tells me tonight's session will be rich, practical, and interactive. Interesting. Okay, so while that is ongoing, I would like to ensure that we have a smooth and focused session this evening. So please take note of the following housekeeping guidelines. Kindly keep your microphones muted throughout the session. Cameras should remain off to help with bandwidth and minimize distractions. Please use the chat box and Zoom reactions reactively. So for example, if the speaker is saying something that really hits you or you can relate with, you can always use the Zoom reactions to, express your emotion at that time. And most of the engagements will be happening via chatbots and Zoom reactions. So questions, insights, and reflections are welcome in the chat as the session progresses. Yeah. Okay, so tonight's webinar is especially important because Nigeria is undergoing a major shift in how taxes are administered. The Nigeria Tax Administration Act 2025, effective from January 2026, represents a significant reform aimed at simplifying tax administration, reducing multiple taxation, expanding the tax base, and improving voluntary compliance through digital innovations such as unified things, e-invoicing, and VAT physicalization. So for many individuals and businesses, these changes raise questions and sometimes anxiety. I know a majority of us here are here because we want to get off the anxiety of the new tax law. You hear people talking about it everywhere. So now a quick word about DBC. So you may be here and you don't know what DBC is. DBC is the enterprise, is a part of Daystar where it's a community, Daystar business community, where the business is like a community for business people, for professionals. And we exist to discover, develop, connect, and expand the business potential within our community. And that's what, so at DBC, we bring together entrepreneurs, professionals, executives, and investors under a shared commitment of excellence, integrity, and kingdom influence, where faith meets enterprise in a very practical way. Our goal is simple: to equip business people to thrive, grow sustainably, and make meaningful impacts. So tonight's session promises to be practical, insightful, and highly relevant. We encourage you to stay engaged. I hope you are with your notes and pen. You need your notepad, you need to take notes and follow the conversation closely. By the end of this webinar, you should walk away with clearer understanding, practical direction. I could see from the charts that a number of people say they want to have better understanding of the tax law. So I believe you believe in with clearer understanding, practical direction, and renewed confidence in navigating Nigeria's evolving tax environment. Trust me, you will want to stay till the very end. So at this point, it is my pleasure to introduce the moderator for today's webinar. He'll guide us through the keynotes and panel sessions, ensure seamless transitions, and help us get the best value from our speakers. Please join me in welcoming Bayo Babatunde. Please unmute. Unmute and share your work, please. You're welcome, sir.
Good evening, everyone. It's very, very good to be here this evening. I'm excited to be moderating this program this evening. Thank you to my leaders and the core team for giving me the opportunity to moderate this program. So again, I say a good evening to everyone and a very warm welcome to the DBC tax webinar. We are truly glad you could join us this evening. I will have an important and very practical conversation around navigating the Nigeria tax landscape. It is no news that the tax environment in Nigeria is changing, and for many of us, especially business owners, this has raised many questions, many concerns, and it is actually creating a lot of anxiety for us. So tonight's session is designed to bring clarity, reassurance, and direction to this conversation of the new tax law. Let me remind us that God values order. God is a God of order, and scriptures also tells us in the book of 1 Corinthians chapter 14, verse 33, that for God is not the author of confusion, but of peace. Our God is a God of peace. So tonight is all about removing all the confusion, restoring peace, helping us to respond wisely and responsibly to the changes in the Nigeria tax landscape. So feel free to use the chat box to share your questions, to share your observation, to give your comments as we go along. Putting context to the conversation for this night. With the Nigeria Tax Administration Act 2025 now effective from January 2026, we are seeing significant reforms in terms of unified things, e-invoicing, VAT fiscalization, and digital filing systems. These reforms are not meant to make life harder for us, as many will assume. Rather, they are designed to simplify compliance, to reduce confusion, and to help businesses operate more transparently and sustainably. At the end of today's session, be very sure that you will feel better informed. You will feel more confident. You will feel more prepared to respond appropriately in this new tax environment. So, before I introduce our keynote speaker, I know you don't want me to bore you with all the preparatory speech. I would like to get a sense of who we have with us this evening. So please use the chat box. If you operate a small and growing business, type in the chat box SME. If you are a professional or an employee, type career. If you are a professional or you're an employee, type career. If you run a structured business that is thriving, right, type entrepreneur. Awesome. Let's keep it coming. SME and career, career, entrepreneur, SME, career, SME, career, SME. Wow, we have a lot of SME here. It's a mix of SME and careers. Yes, entrepreneurs, SME, career. Awesome, awesome. Awesome. Thank you so much for your response. That's very helpful for us. The mix of the different people that we have with us this evening tells us that though our realities may be different, we are all navigating the same tax environment together. If you're a business person, it has implication on how you run your business. If you're an employee, it has implication on how you are taxed. And if you're an entrepreneur, it also has implication. So let me use this honor to bring up our speaker for tonight. We are blessed to have a keynote speaker who understands both the technical side of taxation, and she also works closely with everyday businesses and entrepreneurs. Please join me tonight in welcoming Titilope Aladeshuyi. She is the principal partner at Onifade Titilope Chartered Accountants. She has over 24 years experience across accounting, audit, tax advisory, and has supported hundreds of SMEs and entrepreneurs, helping them to move from uncertainty to confident compliance. She's known for making complex tax matters simple, practical, and actionable. Before she begins, please use the chat box to show her some love, a welcome message, a clap emoji, a warm greeting. Please, let's go to the chat box and give our keynote speaker a warm welcome. Ms. Lope, thank you for being with us this evening. I leave the mic to you. Thank you. Be here. Please, let's keep the welcome going until she can unmute her mic. She's sharing her screen, yes. Thank you. One question for Titi Lope this evening. Please type it in the chat room. I know some of us, we have loads of questions that we have prepared, loads of concerns, you know.
Okay, then go ahead.
Right.
Hello, can you hear me?
I can hear you, please. Welcome, welcome. Okay. Thank you for joining us this evening. Okay. We can also see your slide.
All right. Good evening, everyone. Please, the host need to. I have two systems. So one is a host. Okay. The other one. I join in with two systems.
Daniel, so please, can you make our host on both systems? Is your name the same on the two systems?
Yes.
All right. Daniel, please make our host, co-host rather.
Go ahead, ma. Go ahead, ma.
Okay. Good evening, everyone.
Good evening. Welcome.
I'm happy to be here today, and I want to thank the leadership of DBC for giving me this platform to educate and empower the business community. So can you please, did you see my slide?
Yes. Yes, please.
Okay, so I go ahead. Our topic today is navigating the new Nigerian tax landscape, the compliance, implications, and opportunities. So I want to start by saying that tax is biblical, because some of us have the notion that tax was introduced by Nigerian government, or maybe it's because government is broke. That's why they are introducing tax to us. But no, tax has been from the days of Moses. Tax has been in existence. So there has been a little changes in the Nigerian tax law. I'll talk about the, I will try to talk about the introduction, which is what happened. Why did we change the Nigerian tax law? What and what is the benefit for us? How can we position ourselves? Why it was repealed was
even confusing. They were so confusing to even consultants themselves. Sometimes they will say, oh, you got to do this, you pay education tax. Later they will say, no, you have not paid this, you have not paid that. So as much as people want to comply, but it was so difficult to comply because it was so cumbersome. So that was why the Nigerian tax was, let me say, there was an overall in the Nigerian tax law. So it has to change completely. Some of the things we're doing before were repealed and new ones were introduced. So that's the essence of this tax law. And the essence of the tax law is to simplify it, make it easy for you, an average person, to comply. You really don't need anybody to guide you. That is the objective. Or we know that we are seeing transition phases, so you might still need people, you might still need tax consultant to put you through one or two things. But in the long run, you will be free to update your record yourself as an individual and also as a company. Okay. So what are the key changes in the reform? That's what I want to discuss now. So the company income tax, initially we had a standard rate applied across board. Everybody was paying 30%, except the 2020 finance act that introduced small business that were at 25 million. You should not pay tax. You should not pay any tax. Everybody was to pay 20, 30% across board. The tertiary education tax was 2.5% of accessible profit. Accessible profit is tax profit, so you don't need to bother yourself with that. The new change now is that instead of paying accessible profit, a development levy was introduced. This development levy was to merge all the multiple taxes we are paying into one. What is the implication for companies is that higher tax burden for large companies. Because instead of you paying 2.5% of your accessible profit, you'll be paying 4% now. The minimum tax, our previous position, we had minimum tax. Minimum tax was applicable to all companies. Anytime you didn't have a profit, the government takes minimum tax. There's a particular rate they will apply on your turnover. What has that got to do? What is the new tax law saying now? This has been abolished. What the impact on this is that preservation of capital for all companies. The minimum tax, somebody had a loss. Let's assume you have the loss of 100 million. Government will say, no, they are not bothered. We are still going to take 0.05% of your turnover as our own stake in your business. So this has been abolished now with the new tax law. Our VAT rate still remains 5.5%. The new changes is that a lot of items are now being included in exemption list. Things that ordinarily were not exempted before have now been exempted from VAT. So what it means is that uh, small businesses now have free money, cash flow. Then we have more taxable, non-taxable items, which makes things now cheaper for an average Nigerian. However, there is a stricter filing deadlines. Penalties have gone up for non-compliance. VAT registration threshold. This was initially not enforced strictly, but now all companies, irrespective of your income threshold, you need to register with the Nigerian Revenue Service, formerly known as FRS. Now, all businesses have to obtain their VAT registration. So immediately you register your business, kindly go to the FRS office to formalize your registration. Then we have capital gains tax. The previous position, we had limited scope. It was not everybody that was being taxed, but now CGT now applies to digital assets. That's if you are doing crypto or you are doing forex trading, you need to pay CGT on it. So the onus is now on investors to track all their transactions. The area of reform, we also have stamp duties or electronic money transfer. Initially, it was applicable to only banks, but now it has been extended to POS, fintech, and other electronic wallets. So the more you use the other platform you use, you will, I believe by now you will have been seeing all the charges. So what is the impact? Wider coverage increases compliance responsibility. So though this POS and the fintech, they need to be doing compliance now. There will be a report they will be sending to either FRS, NRS, or CBN. So if you are in that sector, you need to make more inquiry on what you're expected to do. Withholding tax. Initially, we had a flat rules across transactions. Now, withholding tax has been clarified. So treatment of commission, agency fees, and digital services were properly highlighted. It has reduced, the impact is that it has reduced ambiguity and there's higher enforcement. We have payee, which is personal income tax. Annual filing was not strictly enforced, but now state is now enforcing it. Initially, the penalty was 500,000 for failure to file. So if you're an employer, by 31st January, you are expected to file all your staff return. Then failure to file, you have penalty to pay. Then exemption for small businesses. Last year, as at close of last year, 2025, before this act, small businesses was not properly defined. But now, small business is a business that have turnover of 100 million and below. They are exempted from company income tax. Then they are also exempted from charging VAT. Another reform that has taken place is digital economy taxation. Initially, we are not clear. You don't know whether if you do crypto, you are to pay tax or you are not to pay tax. But now, digital services, online platform, and foreign suppliers are now taxable. Impact on individual, more tax coverage for the digital economy. So there is no more hiding place. That's what Nigerian government is telling us. Automated tax administration. Initially, it was manual system. Some few years, I think 2020, 2021, Tax Promax was introduced, which is the platform for the NRS, and the state also introduced e-filing. In Lagos, there's e-filing. I think in some of the states, I know of Kwara and I know of Ogun State, and I think some other states are also adopting it. River State, I'm aware of that. They're also doing e-filing. So there is no room for excuse. Faster filing or stricter monitoring. Tax audit and enforcement. Now, audit were periodic, and sometimes they do 6 years audit. You just receive a letter, 6 years back duty. Now, the audit can be done real time. They don't need to come to your office anymore before the NRS can do an audit on your organization. The impact is that there will be higher likelihood of being audited because there are so many reports the NRS now have access to with the use of AI. Penalties and interest. In the former regime, we had lower penalty, so it was easier for us to not to comply. But now we have higher penalties and we have automatic interest, strict enforcement, more cost for late filing and non-compliance. Imagine if you're a small business and by this new law, you are not supposed to pay anything. 0 naira you're supposed to pay, but because you file late, you will pay a minimum of 100,000 naira for filing late. So this is not a time for you to file it. Incentives and reliefs. All these incentives were scattered and inconsistent. Now we have targeted incentive for manufacturing, for exports, for agriculture and renewable energy. It encourages investment in priority sector. So this is just to a graphical illustration of this. I don't know the author, but I feel this will be good for us to see. So the key changes for everyday life is that with the new tax law, everybody is mandated to have the tax identification number. I'm aware Lagos State has started because of the annual return filing we are doing. With your NIN, you can get your tax identification number. But if you already have a payer ID, a number that starts with N, if you are living in Lagos, N dash something something, you already have it. So if you log into your e-tax, you can easily get your number. Then now all income has to be disclosed. That's for individuals. Then taxes are charged on progressive basis. The more you earn, the more you pay. Then gratuity and pension are exempted from tax. Then we have a rent relief. There's a rent relief of 500,000 maximum for individuals. Then on investment, your 10% on your dividend is the final tax. That has been the case, and that is still applicable now. If you have capital gain tax, I will talk more about it. It is tied to your revenue status. Unlike before that, we have a fixed rate. Then if you are into digital assets, you are now taxable. Your profit is now taxable. Then if you have losses, your loss threshold has been increased to 50 million on digital assets. So there will be some rates that will be exempted from taxes. Then the changes to VAT and consumption tax. Our consumption tax, though the states are yet to pass the law, I need to state that. But with the new tax law, we're supposed to suspend consumption taxes, but the states are yet to make a decision on this. So the consumption tax, as we speak today, is still in force. And my meeting with LRS last week still confirms that they are still charging consumption tax. Then VAT still remains 5%, 7.5%. Taxes on food items are gone. Taxes on LPG, which is your cooking gas, it has gone. Taxes on commercial vehicles have been removed. Taxes on fuel has been suspended. We don't know when it should be implemented. Then what is new for businesses? Single digit of 4% for development levy. Then we have tax relief for small business. We have stricter rules. Then bank to report transactions that are above 25 million for individual in 3 months, 100 million for companies within 3 months. So you can see that the government is ready. So because we are dealing with a business community, our focus is more on business, on companies, what happened to companies. So I'm going to talk about taxes that are applicable to companies. The major taxes applicable to all categories of companies in Nigeria are company income tax, which is tax on your profits, development levy, which is 4% of your tax profit for resident companies only. So if your company is not resident in Nigeria, you're exempted from development levy. Capital gains tax. This tax applies to the surplus realized from disposal of fixed assets. So if you sell an asset, let's assume you are using a motor vehicle for a company and you bought it 5 million naira and you are able to sell it maybe 10 million naira because of the valuation in naira. You know you are having a 5 million profit. So there should be a tax on it. But if you now reinvest that 10 million naira to purchase another asset for the company, that money will not be subjected to CGT, that is capital gains tax. We have VAT, which is consumption tax, 7.5%. Small businesses are exempted from it. Withholding tax, these are tax in advance payment of taxes, and it is applicable to selected transactions such as dividend, 10%, interest, rent, 10%. The rent here is for company corporate rents, not individual paying to landlord. Corporate organization paying to their landlord. They're supposed to deduct 10% royalties, contracts, and management fee. So your company is a tax agent. So if you are involved in all this, the duty is on you to deduct the withholding tax before paying to the beneficiary, and you remit on behalf of the beneficiary. Other statutory levies are for employers. We have to pay contribution scheme for pension for their staff, NSITF, ITF, all the lists are like that. So we are talking about VAT. VAT remains at 7.5%. Then now, the plus now is that initially, if you purchase an asset for your company, let's assume you bought a TV worth or an equipment worth 1,000 or 100,000 naira. There's a charge of 7.5% on it, so you pay 107,500. Initially, the tax law did not allow you to use that 7,500 to offset any VAT you want to pay to government. But now, once you have your receipt, you can use it. Not only that, service-oriented companies can now use all receipts that are VAT. For example, your electricity bill, there's VAT you are paying on it. You can actually use the VAT to defray your taxes. Internet service and any other services you use. So you can use the VAT to defray your to defray the VAT you pay to government. Then there is a legal framework of fiscalization and e-invoicing. For now, NRS has introduced to companies that generate 5 billion and above. So if your organization revenue is above 1 billion, just start preparing your organization for e-invoicing. Because what e-invoicing is all about is that there will be an interface between your accounting software and the tax formats. So that anytime you are raising an invoice for your customer, the government also gets a copy of your invoice. That's what e-invoicing is about. As some organizations they have used some organizations as a base, like ShopRite. Most of the departmental store, I know ShopRite, when you buy items from them, you see that their receipt is having FRS logo on it. They have implemented that e-invoicing a long time ago. So it's now the turn of very large company, and they will start skimming down to medium-sized company very soon. The law also make a provision of a refund of VAT within 30 days when you apply. So that means for people that are clearing goods, I will use them as an example. You bring in consignments, and by the time you pay your custom duty, the custom duty is going to millions, and you are unable to sell your product. The law allows you to go and apply for a refund of that money from government. So let's assume you shipped in goods worth 1 billion, and the VAT you pay on your duty charges is about 100 million. You can claim that 100 million, and it will be paid to you within 30 days. That's the promise of the federal government. The small businesses, they are exempted from charging VAT and also remitting VAT. So if your turnover is turnover is revenue. Turnover is revenue, another word for income. It's less than 100 million, you are free from charging VAT, irrespective of your services. However, there's a caveat. If you are into professional services, such as an accountant, a lawyer, you are not exempted from charging VAT. Yes, unfortunately, professional services are not exempted from charging VAT. You are to charge and remit. But if you are not offering professional services and your turnover is not up to 100 million, you are free from charging VAT. So there will be penalty if you fail to file or remit, I will still discuss the penalty later. We have some goods that have been exempted from VAT. If you are a vendor to organizations such as UNICEF, World Bank, and the likes, any invoices you are raising for them is exempted from VAT. And goods that are supplied to humanitarian or donor-funded projects, they are also exempted from VAT. Baby products, educational material, locally manufactured sanitary pads, public transport, land or building, and interest in land and building, they are exempted from being charged VAT. Then we have some products that are zero rated. Zero rated means there is no VAT element in all the production cycle. Basic food, as long as you are not eating in Sheraton, in a five-star hotel, you will not be charged VAT. So most restaurants should have dropped the charges of VAT as long as their turnover is not up to 100 million. All medical and pharmaceutical products, they're exempted from VAT. Fertilizers and medical herbs exempted from VAT. Company income tax is now reduced from 30% to 25% for all categories of companies, except small companies. A small company is a company that has a turnover of less than 100 million, but its fixed asset does not exceed 250 million. So if your turnover is less than 100 million or your fixed asset, that means your equipment is more than 50 million. You are not a small company. So please, I want you to pay attention to that. You must not exceed 250 million to qualify as a small company. Your fixed asset must not exceed 250 million. Small companies will be taxed at 0%. The reason why the government did this is to reduce the financial burden on small business and also encourage plowing back of profits so that the business can grow. There's another tax that was introduced called development levy. The development levy, the small businesses are exempted from it. And the development levy replace all the various taxes we pay. Some of them we pay ITF, that is information technology levy, education tax, lease trust fund, you can name it. So all those ones, they have now used the 4% development levy to replace it. What's the objective of this is to make tax payments simplified for all taxpayers. So we have withholding tax. I want to clarify some. I observed that there are some misconception on withholding tax. So I want to talk more on it. Withholding tax is an advance payment of income tax that is deducted at source. It is not your final tax, except in the case of dividend. That is where it is the final tax. So individuals are not empowered to charge withholding tax, but companies. So yeah, is what it is. So when you are giving contracts to companies, to your vendors, contracts that are above 2 million in a month, you are to charge withholding tax, and the taxes varies. So you will need to consult your accountant or your tax consultant to guide your account department. The onus is on you, the company, to withhold and remit on behalf of your vendor, and you will remit in your vendor's name. So at the end of the financial year, the vendor will use the withholding tax to defray his income tax. That's what the law says. So withholding tax is not replacing VAT. Some business owners confuse that. I've charged, they deducted money from my money now. I should not pay VAT. No, no. They are not related at all. They are separate. So the regulation expands the categories of persons required to deduct withholding tax. Under the new rules, virtually all businesses, organizations, including those that are tax exempt, are mandated to withhold taxes. withholding tax. So if you are working with government, any other agency, they will withhold your tax. However, you must know that if you are a small business, you are not supposed to be charged withholding tax. You need to tell your vendor or you need to tell your client that you are a small business. You write them that your income is not up to 100 million. Then, if you are not even a small business, but your contract is not up to 2 million in a month, that contract is exempted from withholding tax. So that is a caveat there that I want us to understand. Then the government also introduced some economic development incentive for us so that we can. So what are the incentives? We have for small companies, your turnover of 100 million, you pay zero CIT, zero development levy. We have VAT threshold, turnover of 100 million. You are not supposed to charge VAT. And so when you are not charging VAT, you don't have anything to remit. However, as of today, you still need to file. Because the law says you should not file, but as of today, it has not been implemented. So if you are not filing, you are incurring penalty or tax as for your company. So you still need to file as of today. Loss relief, there's something we call loss relief. Initially, I talked about minimum tax. With minimum tax, under minimum tax, whatever profits, when you have losses, it is being charged 5%. When you have losses, it is being charged 0.05%. But now, government introduced loss relief. Loss relief is for all categories of complaints, except your turnover is up to 20 billion. So what it means is that your threshold is above 100 million and you now have a loss. Now with the loss relief, you can carry the loss forward indefinitely. Government will compensate you back. So if you have a loss of, let's say, 5 million naira in year one, year two, you now have a profit of 1 million. The government will first of all remove from your profit the specific percentage they will remove from that 5 million you are carrying forward as loss until you are able to recover your 5 million. So that's an incentive. Withholding tax, all companies, I've said, are now supposed to. This withholding tax is applicable to all companies. However, transactions below 2 million are exempted from withholding tax. However, professional services are not exempted from withholding taxes. So please be mindful when you are paying your auditors, your tax consultant, your legal service, the services are not exempted from withholding taxes. So another thing the government introduced is it's under agriculture. New businesses will not have to pay any tax for 5 years, irrespective of the amount you invest in agriculture. So if you are looking for a business to diversify into, I think the agriculture sector is a good one, irrespective of what you are doing under agric, whether you are doing animal husbandry, you are doing feeds, you are doing planting for 5 years, no tax to be paid to government. So initially we have something we call pioneer status. This has been cancelled. Pioneer status is a tax holiday government gives to company. But now it has been replaced with economic development incentives for priority sectors. So apart from the 5 years holiday, the agricultural sector have, if you are able to invest a minimum of 30 million, 500 million in the agricultural sector, you have a relief, a tax holiday of about 15 years minimum. If you are under energy, you invest 5 billion to 100 billion within a period of 12 to 20 years, 100 to 5 billion to 100 billion, you have a tax holiday for 12 to 20 years. Mining and quarry, if you invest 5 billion, the threshold is 5 billion, you have a 20 years holiday. not pay any tax to the Nigerian government. Health sector, if you manufacture medical equipment and supplies, you have a tax holiday of 5 billion. All these are for manufacturing, not trading. Creative sector and communication technology, you invest in motion pictures, videos, TV program, production. You're able to invest to 50 million. We have a tax holiday of 20 years. So our people in creative sector, please take advantage of this. I understand some people were able to invest so much in videos. They are making like 1 billion turnover. Advice that they look at the law and see how they can benefit from this incentive. Because if you don't apply, it's not automatic. Government will not give you. Utility projects, they have 15 years. Chemical and building materials, if you invest up to 2 billion, you have 12 years holiday. Steel and metal, 5 billion, you have 12 years holiday. If you are manufacturing motor vehicles or component of other transport equipment, you invest up to 5 billion, you have 12 years holiday to 20 years. Industrial machine, if you are producing that, 5 billion, irrespective of the number of years you have been in business. Pioneer status was strictly restricted from when you commence. Now, irrespective of number of years, and you can showcase that you have invested up to 5 billion with the economic development incentive, apply for it and get your tax holiday. Environment, if you invest in waste treatment up to 2 billion, that 12 years holiday. Manufacturing of textile, 500 million is the minimum. You have 12 years holiday, minimum. Other manufacturing, you manufacture paper, you have invested 1 billion, you have 10 years holiday. Then I can see this. Business processing outsourcing, this for services. And the government see that you have invested up to 2 billion. You have also tax waiver for it. These are general fines and penalties. Yes, I think you pay attention to this. Tax area. For your CIT, this is applicable to all categories of company. No, earlier I said small businesses are exempted from CIT, but you are not exempted from filing. Late filing of annual returns, the first month you pay 100,000. Until you file, you'll be paying 50,000 every month to the day you file. So let's take a case study of a company that's supposed to file its return, a small business that's supposed to file its return in January, and January ends, it did not file. By February, the tax rumors will have charged you 100,000, and the fellow remember to file in June. The fellow will have ended up paying like a 300,000 on what is supposed not to pay for. So for new companies, you have 18 months to file. 6 months after your year end. Your year end is 12 calendar months. Then you have to file 6 months after your year end. So all companies, CEO, kindly note that and make sure your auditors and your accountants comply. You have to register new companies with NRS. NRS is not Nigeria Revenue Service. All companies. Failure to register for VAT is 50,000 first month. Then subsequently, you'll be paying 20,000, 25,000 every month. So my recommendation is immediately you register your company with CAC, request for your TIN. The TIN is online. However, you need to still register on the FRS portal. That's what they are talking about. NRS portal now. So you still need to visit the tax office and activate your tax forms. But monthly filing, this is applicable to all companies. Failure to file is 100,000, and VAT is filed 21st day of the preceding month, of the following month. So what it means is for January sales now, you'll be filing it in February, and you must file all not before 21st day of February. Failure to file by 22nd of February, you have inherited 100,000. Even if you are supposed to pay 0 naira, penalty is there. If you now, let's assume you filed, but you did not remit the money. So the federal government will start charging you penalty, 10% penalty. Then they start charging interest at CPN rates. Let's assume the VAT is supposed to pay is 100,000 now. 10% penalty, that's 110,000 plus the CBN rate, and I think CBN rate is about 20 something percent, 20 something, 24, 25%. That's what the government will start charging. And it's a daily fee. I beg, sir, I don't know. It was not applicable. Withholding tax, you are to remit withholding tax that you deducted from your vendor on or before 21st day of the following month. Failure to remit is 10% penalty and also interest on CBN rate. Tax evasion, this is applicable to both companies and individuals. If you deliberately refuse to pay your taxes, your fine can be up to 20 million or imprisonment, depending on the gravity of the offense. And there's no deadline. And please, I need to let us know that the Nigerian tax law empowers the tax office to go 6 years back to your record. So this is year 2026. Transaction in year 2026 will still be revisited up to year 2032, 6 years. Okay. So incorrect returns or false declaration. This is applicable to companies and individuals doing business. If you want that report or you falsify information, you have up to 1% of your turnover as fine, or you get a court imposed fine. Failure to deduct withholding tax or to charge VAT on companies. 10% penalty plus interest on the payments. This will be applicable to large companies. Failure to register for TIN. You will charge, you didn't have a valid TIN, or you are engaging people that don't have valid TIN. Your business can, if you don't have a TIN, your business can be closed down and be charged administrative penalties. But if you are engaging businesses that don't have a valid TIN, you also have a fine to pay. And I think the fine is up to 5 million. So please make sure that all your vendors have their valid TIN. And also make sure that when you are sending your invoices out, you should put XYZ Limited TIN. Write your TIN number on your invoices. Please note that if you are yet to do that, the CEO should please ensure that is done for their company, so that you will not be treated as a company that is not compliant. Then we have pay as you earn. You have to remit it on or before 10th of the following month, except you are unable to pay salary. So if you are unable to pay salary, kindly tell your tax consultant. They know what to do for you. So then we have failure to file annual return that is ongoing. It will end 31st of January. By 1st of February, you have a 100,000 penalty to pay, and the penalty will be increasing by 50,000 every month until you file. So how to transit smoothly and what you should prioritize as a business owner. Number one, set up and registration. If you are yet to register with Nigeria Revenue Service, kindly do so. Don't tell me I already have TIN. Go and regularize with them. There's something we call tax formats. Let your tax formats be active, please. For states, register with state if you have employees. Register with states. Lagos State Internal Revenue Services, they have offices almost everywhere. Register with states. If you don't know how to do it, consult your tax consultant. They can help you with that. TIN is mandatory and must now apply on all your invoices. Operational hygiene. Now we need to split our revenue. Stop doing personal transactions with your personal name. Business transaction with your personal name. Oh, this thing did not work. And now ask them to pay the money for our services inside my account. You are putting yourself inside problem. So Separate your personal fund from business operation. Then be precise with your bank narrations. If you are paying a client with specific payment for services, if there's an invoice, put the invoice number. Be ready for audit. You know, all these things now, we have moved digital. You cannot, this is not an error to say, I don't have documents. You are fine that you will pay for not having documents. So kindly keep all your records intact. If need be, store them in your Google Drive, or if you need to have an external drive to be storing it, kindly do so. Need to keep record of all your pensions you are paying to employees' costs, all your daily expenses. You need to keep them. Large company priority, that is turnover of company above 100 million. What are they supposed to do? They are to get themselves ready for the e-invoicing, especially if your turnover is above ₦1 billion. You start making inquiry about the cost and now to position your company before NRS says it is fines you. Then they will be paying consolidated tax of 4% on the accessible profit. Then there is forex conversion. Now, it is not allowed as a business to be going to parallel market, black market, to be buying dollars. Why? Because initially, as at 2025, any rates to purchase the dollar, the government agrees, the tax office agrees, and they give you foreign exchange loss or gain. But now they are not concerned again. It is only the official rate. They will be changing your foreign purchases, your forex transactions to naira. So let's assume you are importing goods and you decide to go to Aboki to buy your dollars. Brother and sister, you're your own. Government will not give you any relief so that you don't incur a lot of losses. Please, you need to plan your forex transactions very well. Go to the bank. If possible, notify your banks in advance. And I think there are many windows where you can buy your dollars now, your forex now. The strategy and the risk. There are tax incentives. You should explore the 5% investment tax credit if you are if your company is in the large, if your transactions are above 100 million, there's a 5% investment tax credit you can also enjoy on all your qualifying assets. Conduct like a mock audit for yourself, especially if you have been in business for a while. Do a simulation. If tax people should even come, what will they look at? Ask your consultant to come and check your records so that areas where you are lacking, they can point it out to you. It can cost you money, but will give you peace of mind. The minimum tax is applicable now to companies that have invested 20 billion and above. They have to pay, whether they have loss or they don't have loss. Their taxes is 15% minimum tax they will be paying. What are the legal tax plan and efficient business structuring that we need to put in place? Priority actions for business owners. Number one, understand and comply with your tax obligation. The first thing is that ensure your digital fosters compliance. Keep accurate digital records. FRS, NRS, state no longer listen to excuses. There was fire. There was flood. Accountant is not around. They are not ready to listen to that. They are, because the law has empowered them to be charging you penalties. They are happy to charge that penalty, and they will keep charging it until you comply. Declare all your income, including foreign earnings, in naira at the official rate. That's what the law says. Be aware that penalties for non-compliance have increased significantly. Someone can ask, oh, I earn income in dollars. Will I pay my taxes in dollars? No, you have to pay it in naira at official rates as at the date you are remitting. File taxes on time. Avoid fines and extra charges. Number two is register the right business structure. I want to talk about this a little because we have the businesses we register in Nigeria under CAC is different from the way uh, tax view businesses. So if you're an enterprise, for example, Ade and Co, you are treated as an individual under tax. You are not treated as a company. So it is a tax that is applicable to individuals that are applicable to an enterprise. If you're a partnership, you are just an ordinary partnership company, you are also treated as an individual. Your profit will be taxed based on PIT, personal income tax. But if you register as a limited liability company, PLC, private limited company, then the issue of company income tax applies to you. And the issue of 100 million threshold applies to you. You are an enterprise, irrespective of your turnover, whether it's not 100 million, you will be taxed personal income tax because you are treated as an individual. Please note that. For multiple companies, you might think of group structures so as to maximize loss relief and reduce penalties. Number three is that maximum allowable deductions is not applicable for loss relief. So you can use your loss relief indefinitely. That would be an advantage for a group structure so that when one of your conglomerates is not making profits, you can easily take the loss relief for everyone. Track capital and digital asset losses carefully if you are into forex or digital markets. Manage foreign exchange and cross-border transactions. I've emphasized that ensure that foreign currency transactions are purchased from banks at official rates. Then your vendors and suppliers tax compliance review regularly because the onus is on you to ensure that people you are doing business with are tax compliant. It's not on the tax office anymore. They have pushed the responsibility to companies. Then verify their tax ID that it is on tax promise. Then transactions below 2 million are exempted from VAT, from withholding tax. How to transit smoothly and what to prioritize. I just want to do a case study of the company, then I think my time is fast spent. How many minutes do I have left, sir?
The time is up. I've
Okay.
been sending you notice on
Okay.
in the chats. You did. I'm
Okay,
sure you didn't get that.
I didn't get it. Okay,
Can you
so
just take 2 minutes to round up?
okay, all right. So for a small business that is growing, what you need to do is keep your proper records so that between your 0 to 100 million turnover, you don't have anything to pay, or you need to document your record and file in your return. So if you grow up to be a large company that is 100 million and above, you must ensure you document your losses so that you can get a relief from government. You must have an active status with CAC, separate your personal expenses from your business account. From a medium company, the tax rate is 30%. Development levy as at now is 4%. Your input VAT, please keep the record appropriately so that you can take all your input, all your VAT on your equipment, on your services. Purchase only Forex from government accredited agents. Then if your turnover is 5 billion, you need to switch to e-invoicing as at now. Then for large entity, very large entity, please follow the global rules. I think then please lastly, let me talk about the personal income tax. The personal income tax is for everybody, irrespective of whether you're a business owner or you're an employee. We are doing progressive tax rates now. Talk to your tax consultant or for more information on it. With this, I want to take my bow. Thank you for your time and attention.
Thank you, thank you, thank you. Oh, sorry.
Thank you, Jesus.
Thank you so much. Please help me put our hands together. Use the chat box. Please use the reaction box to give her a warm thank you, appreciation, a clap in the chat room. Thank you, Titi Lokwe Aladeshui. Thank you so much for that exceptional, value-packed and eye-opening session. What you have done tonight actually goes beyond explaining tax laws. You have brought clarity. You know, you have where we have confusion. I'm sure people now have confidence. Where there was fear, and you know, people now see that they can put structure around, you know, paying. Filing their tax return. Thank you so much. Thank you so much. On behalf of the DBC community, I want to say a big thank you for your generosity, your depth of knowledge, and your commitment to helping us do the right thing, especially the right way. We are genuinely grateful for this time. We know you put a lot of work into preparing for this slide, and the excellence with which you brought the presentation in this session. Once again, we want to say a very big thank you. We truly, really appreciate you. Thank you for serving DBC so well. So just to highlight a few key points from what we have heard from Titi Lokwe tonight, let me try and briefly highlight the key takeaway from her presentation. First, she mentioned that the Nigerian Tax Act of 2025 brings multiple tax laws into a single framework, right? And she mentioned that the goal is very clear. It is to simplify administration and to improve compliance. And it's also to ensure that it is less confusing for both individuals and businesses. So she mentioned that for small businesses, major highlights is the expanded exemption, Business with turnover from 100 million naira or below and fixed assets of under 250 million naira are exempted from companies' income tax. They are also exempted from capital gains tax and the new development levy. This is actually a significant relief and the real opportunity to invest and grow. It provides a lot of businesses with real opportunity to invest, to reinvest their income, you know, their profits, and grow their businesses. Right, but one thing is key that she mentioned, that we must still continue to maintain proper filing and compliance. We must continue to maintain proper filing and compliance. And she also said that for companies above this threshold, the development levies replaces several old levies. So you don't have to be paying all the different levies that they usually pay. So they only pay a single 4% charge, making compliance more straightforward and reducing administrative burdens. On VAT, she mentioned that while the rate remains 7.5, business can now recover input VAT on goods, on services, and on fixed assets. This is actually a major cash flow benefit for businesses, especially for those in the service-based business. All right. A strong emphasis while she was rounding up, some of the emphasis throughout the session was on system and process. She mentioned that e-invoicing is very important. In the new tax environment, compliance is no longer something to fix at the end of the year. It's not something we wait for the end of the year before you begin to think of how you become compliant with the new tax law. with invoicing and data matching, good system are now your legal shield. Good system put in place is now, so some of us, we need to employ the service of tax professionals to help us put our record in order. And for individuals, she said that the Act introduces more progressive personal income tax structure, which affects not just employees, but also affect business owner. It affects professionals and the self-employed person. I know that some questions are already been raised in the chat room asking that, oh, for business owner, what are the, so I'm sure during the panel session, we'll be able to address those concerns. The central message today is that compliance is no longer optional. It is something that is achievable, even though it might look a bit complicated, but it might look a bit, when we don't understand these things, we begin to think that it is not possible. But she's telling us that this is very achievable, having the right structure in place, the right documentation, and making sure that you start preparation early. Individuals and business can reduce the risk, and then they can unlock opportunities in this new tax regime. Thank you so much for that wonderful and highly packed presentation. So to move us further in this program, I will be inviting our supporting panelists to support our keynote speaker that we've already introduced. And both speakers, they bring a lot of professional, corporate, treasury, and tax implementation perspective to this conversation. First, I want to introduce my Egbon, Brother Yinka Ogunubi, right? I've known him for a very long time and I've followed him. He has been very consistent. He is the group treasury manager at CFAO Nigeria with decades of experience in treasury management and financial system across Nigeria and Africa. Also joining us is my friend Adenuga Olamide Abiodun, managing partner at Gage Hedge Tax Services, a seasoned tax professional, economist, and chartered accountant with deep experience in helping businesses navigate compliance responsibly. Please join me in welcoming our panelists this evening. Can we welcome them in the chat room, please? Thank you. Welcome, Brayinka. Welcome, Biodun. And thank you, Titi, for staying with us on the panel. We really quite appreciate your time. So let's get started. I know there are a lot of questions. I know questions have been coming already. So the way it will go is that I will ask a few questions that reflect what many businesses are currently asking. And then we will take questions from the audience. So we have said that you should put your questions in the chat box. My colleagues are already in the chat box monitoring those questions and collating them, and then they will send it for us to take those questions. So please feel free to share as many questions as you can in the chat box. Again, thank you, Titi Lope, thank you, Brab Yinka, thank you, Biodun, for your time at this program. In very simple terms, what is the biggest change businesses should be aware of under the new law? What is the biggest change businesses should be aware of under the new law? This is for everyone. We want to get many perspectives to these questions. so that it can help our participants and audience to understand what the biggest change is about the new law. Thank you. Let me go first with Brother Yinka Ogunobi. Thank you very much.
Thanks, Robayo. Can you confirm that you can hear me clearly?
Clearly, I can hear you, sir.
Okay, thank you very, very much. First, I just want to thank Madam Titi Lokbe for her presentation. I think it was quite concise. In fact, with her presentation, I don't even know what else what else we are doing. She has been able to break down all the issues, and personally, I learned a lot. There were a lot of things that I picked up from there, which will also be very, very useful. So, anything I'm saying here is not to is just to basically buttress what she has already said.
Yes, yes. Right.
Hello? Sorry?
We can hear you. I said right. That's very correct.
Yeah. So everything I'm saying, I'm just to buttress. Now, I hear a lot when people make reference to the tax laws, and they refer to it as a new tax law. And people say it a lot, and you hear that reference, which tends to make it sound like this tax law, is new. It never existed before. And I always try to correct that. I think that sometimes is the source of a lot of the angst and reactions that people see. And I got to say that in reality, actually, the tax laws are not new. They are there. They've been there for a long time. What essentially is new is certain modifications, and maybe in terms of band, rates, and things like that. But for me, in terms of the biggest impact of this tax reform is in the administration of the tax. That for me is where it has become very huge, and that's where a lot of people are probably not even paying attention to, because while a lot of the elements of it existed before, personal income tax, companies income tax, withholding tax, capital gains tax, VAT, profit, petroleum profit tax, all those things are still there. They didn't change. The application is what changed. What I have seen with this tax reform is that they have imputed and they have created a way to be a lot more efficient in collection. So while previously these things existed, a lot of all these provisions existed, they were not enforceable because the systems in place didn't allow for that. But now they have put in place systems, digital resources that allows them to be very efficient in collection. So in summary, what they've done is that, because in reality, when you look at it, they didn't really increase tax. I mean, if you look at it, I mean, VAT is still 7.5%. CIT is still 30%. They made some adjustments and brought in development tax, basically just grouping together some of the small taxes that they had before. They've created certain tax holidays and everything. In reality, what they did was they reduced taxes in a lot of places, but they became very efficient in collection. So the trigger and the target for the tax authority is not in the increase of the tax rate, actually, is in the expansion of the tax net. And this is where a lot of businesses should be very careful, because in exchange for some of those reliefs that they have put in place, they have expanded penalties. So that is where they are going to get a lot of people. Okay, not in, you pay, you don't pay, whatever. They're going to get you at the point of you did not file, you did not file correctly, so your penalty is this, your penalty is that. And so, my advice to people is that understand the tax law, do what you call your tax planning, understand what are the penalties, understand what are the reporting requirements, the deadlines, and just make sure that you do it. So even if you are exempt, whether it's on CIT level or at VAT level, just file. Just make sure that you file. If you file and everything and you have nothing to remit, just file. Because if you don't do that, the mechanisms they put in place will catch you, and you will owe more than you should have paid. Let me stop. Let me stop there for now.
Thank you so much. Thank you so much for that. What I hear you say is that essentially there is not much change that happened in the reforms. The takeaway from what you have said is that they have put systems in place for collections, right? So they have expanded the tax nets. Thank you so much. Can I go to Biodun? What is your perspective to this?
Okay. Can you confirm that you can hear me?
Yes, I can hear you.
Okay. Thank you. And thank you, DBC, for giving me this opportunity once again to share platform with you. It's a privilege, an honor. And I would like to say that Madam Titilope and Brother Yinka, they've talked extensively about this tax law. There's practically nothing new. So, but what I would just want to contribute that the biggest change under this Nigerian Tax Administration Act is the modernization and the efficiency and transparency that the system brought. It brought there's a large, broader tax coverage. So many people will now be in the tax net now. So many people will be in the tax net. The rates that they were charging is not really different from what they've been charging before. But the objective is to ensure that the system is modernized, is harmonized, and tax administration is efficient. So that is the key thing that this NTAA 2025 is bringing on board. Another thing that is also that this tax administration also brought is mandatory tax identification for all taxpayers. Everybody, both individuals and businesses, everybody now, they are under tax bracket. If you have your NIN can be used to generate your tax ID. So nobody can say that, I don't have tax ID, there's no how I can pay my tax. Everybody is now under tax bracket, unlike what we used to have before, where if you have a business and you have branches in different states of the federation, you may likely going to have staffs in other states in which they will have different tax ID, because each state has their own tax ID. Lagos State has its own tax ID, Ogun has its own tax ID, Rivers has its own tax ID, Abuja has its own tax ID. But this new tax law, what it brought, the NTA is introduced and a modernized and unified and introduced a modern way of administer taxes in Nigeria in such a way that one single tax ID can be used whichever state that you move to. So that's one of the biggest things that this NTAA has brought. Another thing that we also brought is there is now a digitalization of tax filing and record keeping. It is important that we keep, as a business people, we should keep record, because there could be tax officials, they have this, they can ask questions as far back as 6 years. They can ask questions. So you should be ready to engage them by making all your records available. What's most important is to keep records to ensure that your record is intact. No matter how small it might be, ensure that you have your record and you file as at when due. Because if you don't file as at when due, it will come with huge penalty. Like for instance, now, if you register a company and you did not activate your tax promise, they will see that it looks as if you have not even registered. And in that instance, they may begin to charge you 100,000 naira. No, they won't even look at it whether you're a small business or you're a big business. So that penalty of 100,000 naira in the first month and subsequent 50,000 thereabout. So you can see that the penalty is so huge. Another thing that this new tax law brought is expanded operating obligation for financial institutions. Most of our financial institutions now, they will begin to make reports about our transactions. So there's no hidden place. As far as tax system, as far as the new tax regime that we have now, there's no hidden places. There's no hidden places. All as a business person, you should just try as much as possible to declare all your income, either as an individual or as a company, because you cannot hide. Everything is there, and there's a mandatory that for every transaction, every transaction must have tax identification number, which implies that they can easily trace all transactions to each person and to individuals. So there's no hidden place. So my encouragement to business is to ensure that they file as at when due, so that they don't incur the wrath of the law. They file as at when due, and they have their books properly kept in such a way that when they ask questions, they can easily answer whatever question the tax authority might be asking from them. Thank you.
Thank you, Biodun, for that contribution. Thank you for your insight. I will ask Kitty a different question, and my question goes thus. What are the top 2 to 3 mistakes small businesses are likely to make if they don't act early? What are the top 2 to 3 mistakes small businesses are likely to make if they do not act early? Thank you.
Okay, thank you. The first mistake is not filing, with the assumption that I'm a small business. Can you hear me?
Yes, I can hear you.
Okay. Assumption that I'm a small business, I suppose not to file. That's first error. You have to file your returns, VAT. You have to file it, especially if you are not an enterprise. The second error they can make is documentation, not having proper records. And the third mistake is mixing personal transactions with their business transactions. That's the most common errors from small businesses.
Awesome. Making the mistake of taking revenue, taking sales into their personal accounts as against into their business account is one of the mistakes small businesses can make in this era. This question now goes to Brayinka, and it says, from corporate perspective, how seriously should businesses take enforcement and data transparency? How seriously should businesses take enforcement and data transparency? From a corporate perspective.
Very serious. Very serious. If you're already a corporate, and I don't know, which category of corporate you are. Maybe you are small scales, medium, and large. If you are large, pretty much, I know that you're already keeping records. You have your audit. You have and all that. So that's probably not the case for you. But if you are small and medium scale, this is very important. You have to keep records, and I think that if there's anything that we have to let people understand is that records is probably your best defense against whatever is coming here tomorrow. If you have your records, then you can actually have a whole lot of defense. I mean, tax is about profit. They're not taxing your revenue. They're not taxing your inflows. Like some people say, they're taxing the inflows in my account. Nobody is taxing anything in your account. What they are taxing is income. And so if you say, for instance, and that's where a lot of large companies are able to take advantage. You don't wait for the taxman to come and audit them. They keep their records of their inflows, their expenses. They keep those records, and they do. Maybe for large companies, it might be a bit more complicated in terms of accounting, but for small businesses, it's not really that complicated. It's about what you sell, what you use to the input that goes into what you sell. You take out the difference, that is your gross margin, and then you take out all your operating expenses. You deduct it from there, and then you have your profit, your net profit. And your net profit, even after your net profit, if you are owing the bank interest, you can still deduct it from there. So that reduces your bank your profit, your net profit completely. It is after that you apply tax, and it is on that you pay. So so that's important. I mean, if you claim, for instance, that my revenue is below 100 million, okay, and so I'm CIT exempt, for instance, or VAT exempt. The question is, how do you prove it? How do you prove it? The way you prove it is your documentation. And this is why what Tito Lokbe said, where she said, separate your personal account from your business account. I know some of us are registered as business name, and some of us are registered as limited liability company. Even if you are registered as a business name, which I know that, really the law doesn't see the difference between you and the company, regardless of that, you separate your expenses so that, you separate the transactions on your personal account from your business account, so that you can prove ultimately that, yes, my turnover is below 100 million. And then you can say, I fall in the line of the zero CIT code. The reality is that there's no tax authority in the old world that can audit everybody. All right. I don't know, even with AI or whatever it is that you might think that you have, there's no tax authority in the whole world that can audit everybody. So they're not looking to audit everybody. They don't have that capacity. However, they will audit the big ones. They will go after the big ones because they know that those are the ones that they will get something from. So if you have probably a small business, they're not looking to prevent you from doing your business. They're not looking to disturb you. They're not their target. However, they want you to do your filing. And this is where records is very, very important. Keep your records, have it in place, get an accountant. All right. You don't have to go and employ I'm sure Madam Tito Lokwe, for instance, is very, their own accountancy firm might be too expensive for many people here, which I hope not anyway. But even if you cannot afford Madam Titi, there's some young accountant somewhere that you can afford, who you can share your records with them, and they can help you to do your records. And when you are doing your account, your financials, don't do for 1 year, do for at least 3 years. Because even for personal income tax, when you are generating your tax clearance certificate, it is 3 years of income of tax that they will show, not 1 year. So those of you who are like, okay, because of all these things now, I'll just go and perfect my income tax for 2025. That's simple. That's your tax clearance certificate will show your income tax 2022, 2023, 2024, 2025. That's it. So it will be strange when it shows 2025. Okay, you paid income tax, but then 2024, 2023, nothing. So the most important thing is this: keep your records. All right. They are your best defense. Okay. Of in the case of any incidents of audit, which is most unlikely. But it is also very good for you to be able to use that as proof to be able to benefit from the benefits and the exemptions. If you don't have those data and those records, there is no way you can benefit from those exemptions. Let me end with this.
Thank you.
And this is what
Okay.
I tell people, that tax evasion is actually more expensive than tax compliance. Okay, it has always been the case. The problem is that Nigerian tax authorities are not been very serious about enforcement, but this time around they are serious. And so the best way for you to avoid tax, which is very legal, you can avoid tax legally, all right, not evade. You can avoid tax legally. The best way to avoid tax is not to evade it by running away, by thinking that nobody will find you. No, the best way to do it is through tax compliance. Get your records, put it in check, put it in place, file when you're supposed to file, show that you are within the exemptions and you are within the tax holidays, you are within all those benefits, and you'll be fine.
Thank you so much. Thank you so much, sir. We have all heard tax evasion is illegal. Tax avoidance is legal. You can avoid tax, but make sure you don't evade it by not filing your tax report. So I'm taking questions from the audience, and this question goes to Titilope. This person says, we offer professional creative services at my company, which is a limited liability company with we have the tax identification number. When we issue quotations to our clients imputing the 7.5 VAT, some of them refuse it altogether, saying they will not pay. In this case, what are we to do? Should we reject the job, or move on and move on working with them like that, accepting payment without VAT? What should we do?
Professional creative sector. I don't know whether your company will qualify as a professional service provider. If your company qualifies as a professional service provider, then you have to charge the VAT. It is the law. They can't say no to what the law says. It's not about.
So what should they do? Okay, should they move on
them,
and refuse the job? Or should they?
They are just. They should notify them and educate them. Whatever tax they charge them, they can use it to offset their own tax.
Awesome. So it's also a need for us to educate our clients. Aside from we getting the education for tax compliance, we also need to educate our clients so that they can be aware and then follow. You wanted to add something to that?
Bayo, sorry. For that particular business, so that you don't lose that business, okay, so that you don't lose it, because I know that some of these things they are easy for us to say, that, but so that you don't lose it, okay, if it's possible for you to increase your fee, if you already anticipate that customer will not pay, all right, so just jack the fee up by 7.5%, and you remit the VAT on your own, but then educate them. It's important to educate them. It's important to inform them. Many people have been, the past few weeks have been saying, we're getting notification from OPay, from MoneyPoint, from this about some VAT on charges. They were not charging it before. They were letting you get those services without charge. But now they've informed you. So you cannot say that you don't know. All right. So the first thing really is let them know. And don't say, it is optional. It's not optional. This is regulatory. This is what the regulation has said. Okay, so for you to know. But so that you don't lose the business in the short term, if it's possible for you to adjust your pricing by a bit, just to be able to. It might not even be the 7.5% completely. It might just be like 3.5 or whatever. You absorb part of it, they absorb part of it, that kind of a thing. Don't lose the business, whatever happens. That's my advice.
Thank you so much. Thank you so much for adding that light to the conversation. All right. So another question from the audience. This person says, and this question goes to Biodun, says, I am into a professional training program with some training organizations. My training fees are being paid into my personal bank account. Wow, red flag. After deducting the withholding tax, how do I arrive at my tax liability? Will the minimum tax on 800,000 Naira apply to me? In this case, will I be regarded as a micro business operator exempted from tax? Please share some light. Biodun, over to you.
Okay. Personal income tax, there's what we call payee, and there's what we call self-assessment. Now,
Right.
clients paying into your own personal account, it is a red flag, as you said, it's wrong. What you do is to try to separate, what the person should do is try to separate his business from his personal account. So let the money for the business enter into the business account. So at the end of the day, this person will be able to pay two kinds of taxes. Number one, he will pay, if he earns salary from that business, he will pay payee, as when he's paying his own staff. He also pay himself because he's also earning salary from that business. He's going to pay payee. And at the end of the day, from that business also, he's also going to pay PIT on that business. So when he's filing, he's going to file both the payee and that of in fact, all his income from salary to profit from the business, everything will be aggregated together, and he's going to pay that as his own tax. Now, when we look at that personal income tax, we have bandwidths, graduated rates at which the tax is being charged. The first 800,000 is charged at 0%. Above that, which is 2.2 million, is charged at 15%. Above that, which is 9 million, is charged at 19%. Above that, so it has a graduated rate. So what the person, at the end of the day, the payee, the salary he earns, you will need to calculate to see what is going to be the amount, the taxable amount that it's going to pay after taking into consideration, because there is some relief that it's going to enjoy. One of those relief that it's going to enjoy is rent. This new tax law just introduced that rent, and that rent is 500,000 or 20% of his rent that he paid, whichever one, but the cap is 500,000. The cap is 500,000, so he's going to enjoy rent. Then other statutory benefit that's also going to enjoy is pension that he paid, the insurance that is also paid, the NHF, NHIS, and mortgage, interest on mortgage. So those five elements, is going to be deducted before arriving at the taxable income. Like for instance, the taxable income, which is regarded as the payee, those relief will be deducted. After those relief is being deducted, then it's going to arrive at what is called the tax liability, the tax liability that is going to pay. So then, from his own business also, is also going to, whatever profits that is declaring, is also going to declare that. So that's just the way the person will have to treat his tax obligation.
Thank you so much. Thank you for clarifying that.
And again, sir, if the person does not have a proper record, there's what is called presumptive tax. Lagos State Internal Revenue Services, the person will do self-assessment. He will just declare that this is my income, this is my revenue, this is my expense, and this is my income. So they will assess the person on the amount that is going to pay. Then he will pay. That is just how to do that. So they call that self-assessment. Thank you.
Thank you so much. Thank you so much for that response. Okay, so the crux of that, what Biodun just said, is that please, as much as possible, separate your personal account from your business accounts. That should, maybe for some people, that's even the first place to start. Separate your business account from your personal account. I say to business people that you are not your business. Your business is a separate entity from yourself. So you exist as a human being, your business also exists. So make sure there's this clear separation between the two. Thank you. I'm taking another question from the audience. And it's this one says, it goes to Mrs. Titilope, says, I run an hotel, but my annual turnover is less than 100 million. Will I pay VAT? And how does PIT, personal income tax, run, and what percentage of director's fee should be paid as PIT? Should I pay tax? That's the first question. And how does PIT runs? Is asking, and what percentage of directors' fees should be paid?
Okay.
Over to you.
Hotel businesses, yes, sir. Hotel is specifically not exempted from VAT. You have to charge VAT. Hotel services for accommodation, you have to charge VAT. It's only on food item, if you are not a 5-star hotel, that VAT is exempted. But for accommodation, you have to charge VAT, irrespective of your turnover. See, there is a challenge we are having now. The FRS needs to bring out a guideline. That is it. Because if you're all running with 100 million turnover, according to the law, you are not supposed to charge VAT. But specifically, they have said accommodation hotel is VAT. So FRS needs to give us guidance. So by going by the 100%, 100 million turnover, it's safe to say I'm not charging VAT. The law says this. Or you need to file your return. For director's fee, the law says 15% withholding tax. 15% withholding tax on any amount you pay as director's fee. For your pay as you earn, there's no fixed rate. It depends on the amount. People that you pay minimum wage of 70,000, they are exempted from taxes. For every other person, there is a computation table that needs to be put in place. Thank you.
Thank you so much. Okay, this is another question. This is for Brianka. As an employee that has her tax deducted at source and has savings in other banks, in other bank accounts, what should I be concerned with?
Sorry, can you take that again? An employee that
that has tax deducted at source,
yes,
but she has savings in other bank accounts. What should she be, what should she be concerned with or concerned about?
Nothing. You have nothing to be concerned about. You're already paying pay as you earn. Your employer has the liability, and if because the employer is basically the agent of the state revenue service that is collecting the tax. So if they feel for whatever reason that your employer didn't remit the right taxes, they will smack them with liabilities, and it's your employer that will pay, not you. So for those who are employed and their employer is already deducting payee, what you need to do is just to be sure that they are remitting. And if you are remitting, today you should get an email from LIRS to you directly. If you're not getting that email in your email address from LIRS saying your employer remitted XYZ amount to you, to them on your behalf, go and meet your employer and ask, please, that thing you are deducting from my payslip, show me evidence that you're remitting it. So in terms of your personal account, again, we have to reiterate this fact, and I think that it's because there's a whole lot of misinformation around people's bank account. Your money is safe in your bank account. Yes, there are reporting threshold for banks in terms of this, but even with that reporting threshold, they cannot go into your bank account and withdraw. So even if they want to withdraw, how would they even determine what they are withdrawing? Because it is income, okay, that is being taxed and not inflow. So so your money in your bank account is safe. If it's your savings account, you're probably earning credit interest. That credit interest, they're already taking withholding tax from it anyway. So you don't have anything to worry about. What you should be worried about, for instance, is if there are instances of um, certain kind of uh, uh, um, movements in your bank account that even you cannot explain. Okay, and this is where it gets tricky. So people say, but they it means that they know what is going on in my bank account. They don't necessarily need to know what is going on in your bank account. The fact is that sometimes it's about certain linkages. So um, you are a small contractor with, let's say, MTN, and MTN pays you 100 million naira. Okay, for MTN has collected their withholding tax, so they don't have a problem with you. Okay, probably MTN will have taken your team, but let's imagine for the sake of analysis that they don't. They just pay you that kind of money. Now, when they are auditing MTN, they will see that MTN paid you 100 million naira. So they go and check this person that MTN paid the 100 million. So does this person pay PIT? And then they discover that the PIT this person paid last year was just 100,000. So they'll come and knock on your door and say, "Uncle, auntie, you MTN paid you 100 million naira for Kideko, but you only paid the 100,000 naira as tax. Can you please explain?" So that's the first thing they'll do. Can you explain? And then you start to speak English. Oh, it was a gift. MTN gave me a gift. So really, truly, the point is, let's all be guided. If you are an employee, if your employer is already paying your payee, you are fine. You don't have a problem. However, it does not mean that you should not file. Okay, let's separate it, because a lot of people don't understand. They say, "Oh, but my employer is already paying my payee, so why should I file?" Even if your employer is paying your payee, your employer has up to 31st of January, that is up to tomorrow, to file. Okay, that's the employee payee. You have up to the 31st of March to file your own returns. So what the taxman is looking for is that, yes, you have collected, your employer has paid your payee, but there are other income that may have come into your hands. Side hustle, content creator on social media, you quietly did one small deal, one real estate deal. You elected like 50 million naira. All those other income. So the taxman says, "I want you to do self-assessment and let me know that where, I mean, if you are owing me other income." So that's why they expect you to do your tax returns. But if you're not earning any other income outside of your tax of your pay, let me finish this one. If you're not earning any other income, do your tax returns to match your payee. That's my advice. Do your tax returns on the LIRS platform to match your payee. If you do that, you'll be fine.
Wow. I know there are a lot of other questions that have been shared with me. Unfortunately, we will not be able to take those questions. Our time is fast spent. Please, the key issue has been raised already today, and it reflects what many Nigerian businesses are currently facing. So we encourage everyone in our community, in the Daystar business community, everyone in the Daystar community itself, right, to continue to increase their knowledge when it comes to this tax issue. So we should seek professional guidance where it is necessary, and we should start early, filing our tax reports early rather than waiting for enforcement. So as we take the next steps after today, our prayer is that God will continue to grant us wisdom to act rightly and the discipline to do what is required so our businesses can grow in peace and with integrity. On a final note, I know these are the three main takeaways. Nigeria tax system is becoming more digital, and it's become more transparent. There is no hiding place for anyone. Compliance is now mandatory, but it can be simplified with the right system. I have someone who was asking a question, and we're not able to take that question. A freelancer who has not started filing his reports, asking how should I start? Unfortunately, I was not able to take that question. Business that adapt early will reduce risk, and they will unlock the opportunities that is therein. On behalf of the DBC leadership, our coordinator, and the core team, I'd like to say a very big thank you to our panelists, our keynote speaker, for their time and the engagement and their commitment to building compliance and ensuring that we build a trusted businesses in our community. Please stay tuned, watch out for follow-up resources and next steps. I now yield the mic to Taiwo. I'm sure the time is fast spent. Taiwo, please, over to you. Can we put our hands together in the chat box, put our hands together for our panelists, all our panelists, please, let's appreciate them for bringing clarity to us concerning this tax issue. Thank you so much.
Ladies and gentlemen, what a truly powerful, insightful, and value-driven session this has been. If truly you've gotten value, just keep those emojis coming. As we begin to draw the curtains on today's DBC tax webinar, let us take a brief moment to reflect on the richness of what we have gained this evening. Tonight, we did not merely discuss taxes, we addressed clarity over confusion, compliance over fear, and opportunity over uncertainty. The message is unmistakably clear. Nigeria's tax landscape is evolving, and informed compliance is no longer optional. It's a strategic advantage. We have learned so much today, and before we officially close, may I kindly invite everyone to take a moment to respond to the poll question. There's a poll question on your screen. Please take time to respond to them. And it's very important. Your feedback is extremely important to us. It enables the Daystar business community to better understand your needs and to design programs that are increasingly relevant, practical, and impactful. I believe this event has been very impactful to you, so I want to create more impactful events. That's why we need you to please participate in the poll. Go ahead, participate in the poll as we proceed. Your honest responses will help us serve you better. Thank you. At this point, I'd like us to specially appreciate our keynote speaker, Titilope Aladesi. Please let us appreciate her. She did a fantastic job. Thank you for expertly simplifying a complex and highly technical subject into insights that are clear. So she really break down the whole tax law. And those of us that were really confused and did not really know what to do, I believe we are living here today with better clarity. So thank you so much. You've helped us move from unclarity, uncertainty to understanding, and from anxiety. When we started, you remember with some people actually showed some level of anxiety about the new tax law, and I believe you are living here with greater level of confidence. So we are deeply grateful for the depth, clarity, and expertise you shared with us today. Thank you so much. Also, we would like to appreciate our esteemed panelists, Mr. Deyinka Ogunubi. So thank you so much, sir, for coming. And Mr. Adenuga Olamide Abiodun, thank you so much for enriching the conversation with grounded, experience-based perspectives. Your contribution brought balance, practicality, and real-world relevance to the discussion. So we really appreciate you. And to our amazing moderator, Bayo Babatunde, thank you so much for guiding the session with clarity, professionalism, great energy, and excellent time management. You kept the conversation focused, engaging, and impactful. Thank you so much. Please join me in giving all speakers a well-deserved virtual round of applause. They deserve it. It's well-deserved. So thank you so much. And we would also like to express our sincere appreciation to the leadership of Daystar Business Community. Thank you so much. A very special thank you to our core team chairman, Dr. Blessing. Thank you so much for your exemplary leadership, vision, unwavering commitment to building a business community that is not only successful, but also ethical, compliant, and kingdom-driven. Thank you so much, sir. We are equally grateful to the Daystar Christian Centre Pastorate for the spiritual covering and consistent support extended to the business community. Thank you to the pastorate. Most especially, we appreciate our pastor in charge of DBC, Pastor Sheung Ogundelu. Thank you so much, sir. Thank you very much for your guidance and support. And also, appreciation is still ongoing to all our exceptional DBC volunteers. Please, I need more emojis. Thank you to our exceptional DBC volunteers that made this a reality. We see you, we celebrate you, and we deeply appreciate you. Thank you for your service in the Lord's Vineyard, your coordination, technical support, communication efforts, and behind the scenes dedication. You need to see a lot of things going behind the scenes. A lot of communication, a lot of activities to ensure that this program is a success. We say thank you, we see you. Programs of this quality do not just happen by chance. They are built by community individuals who serve with excellence and a willing heart. We are truly grateful. And to every single participant on this call, if we had organized this event and the participants did not show up, it would have been a total flaw. So you are the true VVIP. Thank you, thank you, thank you, thank you, thank you for being a part of today's event. We truly, truly appreciate you. Don't forget to continue filling the pools. Your responses are extremely important to us. Don't keep the responses coming. Keep the responses coming. Even after this, just ensure you fill the pool. The responses are extremely, extremely important to us. And we say thank you, thank you, thank you for your presence. And on this note, we are bringing this event to an end. And I'm certain you're living here better off. You're living here with better clarity and better direction. So we say thank you. Okay, I've seen a lot of requests for the replay. You can visit the Daystar Christian Centre YouTube channel. It's currently live. It was a live streamed program, so you can actually go to our YouTube channel to have a replay for those requesting for replay. Thank you.